provided to you by Xsolla.
Hey, everybody, and welcome to TWIG 125. Today, we have a very special guest with us, the famous Dean Takahashi, who is the lead writer for GamesBeat and VentureBeat. Probably does not need an introduction, but definitely welcome to the podcast, Dean. And he's also putting on the GamesBeat Summit Conference, which is April 28th to 29th. And Dean, maybe do you want to talk a little bit more about the conference?
Wait a minute. Dean motherfucking Takahashi, dude. We have arrived, dude. This guy's a luminary and he's gone on our podcast, dude. I remember this guy ignoring me at conferences for years and years, but now he's on our podcast. Welcome, Mr. Dean.
Have we met?
Yeah, exactly.
Who are you, Eric?
Good answer, Dean.
Well, yeah, thank you. I've been at VentureBeat and GamesBeat for 13 years now, and I am the curator on the GamesBeat Summit Conference, and that's happening April 28th and 29th, and we have some folks like Bobby Kotick, the CEO of Activision Blizzard, coming to speak, and we have a pretty interesting diverse audience this time as well. So we've got Laura Millet from the head of studios at Electronic Arts as well, and some other folks that are still in the planning.
Nice.
We're going to ask him about his $200 million bonus.
Let's see. We'll see how that goes.
It's all in BattleNet, so it's fine.
Yeah, that's right. They gave the $150 gift certificate to all the Blizzard employees. They shit canned, and he gets $200 million of stock, right?
I like the roller coaster of events, because the last episode we recorded, it was like the worst we've ever recorded, and this one we're back on top with Dean on it.
I think he gets Call of Duty points, but
All right. So just covering the news that we're going to be talking about today. So first, Mr. Beast management company Night Media has a new venture fund that's backed by creators, reported by TechCrunch. Second, 2K Sports acquires HB Studios, signs PGA Tour 2K deal with Tiger Woods. Third, Thomas Bravo SPAC agrees to take Ironsource public. Fourth, facing post-Trump slowdown, New York Times eyes $100 billion games market, reported by Bloomberg. And Dean, if you want, maybe we could even cover this Discord sale, potentially worth more than $10 billion. Mm-hmm. And that's the news we'll cover today. Any other kind of personal updates or other things going on with you guys?
Nothing that I feel like sharing. It's all bad. This is a public service announcement to all you people out there that are thinking about having kids. Please avoid having kids in San Francisco. It's a fucking cesspool of shit and nonsense that you have to deal with in order to getting your kids educated. And it's one of the most amazing places to grow up in the world. It has been. I mean, I'm very biased because I grew up here. But man, the system these days, we got placed in the worst school in the world, where we have the best school like 2 blocks away from us, right, for high school. It's just crazy. And the private school system, avoid it at all costs. Go live in Marin or frickin' Orinda or something.
Or Finland.
Oh yeah, or go to the happiest place on fucking earth, Mr. Finland. God damn it.
Now, anyway, Dean, isn't this kind of bad to be mixing news with like politics?
I didn't say anything political.
I don't know. I mean, it affects the game industry, I guess. I hear lots of similar things from people who are based in San Francisco. It's not good for the core of the Bay Area. I think if the core falls apart, then the rest of it will follow. And I'm in the rest of it, so I'm okay for now.
So Eric, being supported by Dean.
I like him already. All right.
Rolling into updates. Adam, you want to go?
Yeah. So one update from me. Eric Seufert did an excellent summary, I think, this week of the latest updates of the Epic versus Apple fiasco. So specifically his point of view on the reasons why ATT, app tracking test transparency, is happening. Number one, to take back control of distribution on the App Store. Number two, to use privacy as a consumer crusade against Facebook and Google's core values. And number three, to benefit its own ad network, search ads, which I think is a great summary. And secondly, I think he really talks about the latest development in Epic v. Apple after the red herring of Apple actually saying if you make less than $1 million a year, you only pay 15%, which actually recently Google just announced. So that was their way of getting a little bit of off their back. But specifically now, Epic is arguing that it has reached a scale that it doesn't need any of the benefits that Apple's App Store is offering as part of the 30% cut. So typically when Apple talks about what that 30% cut's value is, they're thinking fraud prevention, payment processing, tax accounting, discovery, etc. Epic proposes that really it doesn't need that, so Apple should be giving developers the options to operate on iOS without the tax, right? So if developers don't see any value for that 30%, why do they need to pay for it? And which Eric argues is actually partially the reason why ATT is happening. Because ATT actually increases the importance of featuring an App Store discovery, making that value hard to dismiss, even at scale. And the only way that ATT is actually governed is that App Store review. There actually are ways to get around all of this IDFA stuff if Apple never checked. So these are very important bits. That's my only update.
I love Eric. I mean, the guy is so freaking consistent on this stuff, you know?
He really is.
He's just railing against the machine, dude. These big bullies at Apple that are just doing whatever the frick they want to do and screwing everyone over, you know? So I don't know. It's going to be interesting in the next couple of weeks to see how this is going. I got all this analysis all set up so that every freaking day I'm seeing exactly what the impact is by product, by genre. I
want to see that dashboard.
And you know what? Nothing could happen. Nothing, right? It could take months, years. Who knows, right? No one knows, right? But I tell you, these stocks are not trading like anything is going to happen, like Snap and Facebook and Twitter and, you know, all the gaming stocks. So we'll see what happens. All right. I got a couple updates, nothing really that major.
I noticed one small thing about the Internet Advertising Bureau was stirring up some trouble for Apple in France, and that the French antitrust authorities were going to look at the IDFA changes as and for the anti-competitive effects that it might have.
Yeah, anything in Europe too tends to actually go a lot faster and get done a lot faster in terms of regulations. So maybe that would be a bad thing for them to go after.
Yeah, it's also interesting to see what happens with China because with the CAIT, the way they circumvent the IDFA in China, the one they've been planning. If Apple will let that one go, then the whole privacy doesn't have any meaning.
Yeah, dude, that would be just the biggest hypocritical move ever if they let that go. Then everyone should know 100% that all they care about is selling devices, right? They don't care about their partners. They don't care about even the ad revenue that they generate from the store I don't think is as relevant as just pushing devices in China and everywhere else in the world. So
yeah, guys, but let's be fair. Like there should be a need for better protections around data privacy. So you know, we can speculate on Apple's motives, but like on the Android side, there have been a lot of issues in terms of data privacy and things like that.
Privacy, schmivacy. Who cares? Who cares if they know that I wear boxers instead of briefs, dude? What the fuck? Who cares? Anyway, whatever. I'm not going. Moving on. All right. Jade Raymond, again in the news, man. This woman has been everywhere for the last like 10 years, right? But she's still yet to make a game in 10 years or more, right? I can't remember exactly what the stat is.
The last one was 2013, right? Blacklist.
Oh, the Splinter Cell, right?
Yeah, Toronto. Yep.
All right, which is a bomb, right? Disaster.
And she did spin up the studio that made Watch Dogs, right?
Yeah, no. She gets credit for a lot of things she's never done. But anyway, you're right. She did create that studio, but she did not create that game. Okay, so I never thought that Stadia made sense for Jade, right? Because she's basically an action adventure style person. And so she's making a move to Sony, which makes total sense to me, right? Because that's all they have in their arsenal is basically action adventure games. So I think that she finally made a home that made sense because Stadia was just never a fit for her, period. End of sentence. All right. Ad network discussion. All right. I listened to this podcast that you guys put together on ad networks, Mr. Joseph.
Yeah.
And I joke, but I really do want to understand ads and this stuff. I do. I honestly do. But every time I listen to discussions around this, I feel freaking dirty. Dude, I need a shower because it's all about trust issues, stealing ideas, stealing data, stealing product. The whole business just seems like a cesspool of shit. And I just feel dirty. I don't like it. All right. Next one.
Some updates from me. First, Activision Blizzard CEO to get even bigger bonuses while others get laid off. This is a article published by Kotaku. And essentially, they're reporting that CEO Bobby Kotick will reportedly earn a total payout of nearly $200 million. This is while some of its employees have been sharing personal pay information last summer, protesting low wages. Even further, the company has just recently laid off between 50 to 190 people, as well as roughly 800 people in 2019 and hundreds more in the months thereafter. I think what some of the employees are really complaining about is, why are there layoffs when the company itself is doing so well? And finally, Kotaku noted that recently laid off employees would receive health care benefits throughout the year. And to your point earlier, $200 gift cards to battle.net as part of their severance package.
I love it. I do want to say one thing on this. Like, Bobby is ruthless, dude. Like, he really knows how to manage his businesses, and so I got mad respect for Bobby and how he operates. But yeah, this is not a good look, generally speaking. But I bet the 200 million was related to something completely unrelated and was done years ago, and so one has nothing to do with the other. But I do appreciate the sentiment.
This has been discussed a lot in private Slack groups and things like that, right? So I think there is definitely a lot of resentment around this, but at the same time, the company's doing well now. Whether you attribute that to the COVID bump or whatever, but it was basically the reason why he got the payout is essentially a clause in his from the board.
And part of this restructuring seems to be related to the investment that he did in esports, right? Which made no sense at the time, frankly, particularly for Overwatch. And so a lot of those people, like, there's no Overwatch lead left, like, for people to work on, right? I mean, or maybe it's there, but it's not really what it was. So they just had to get rid of these people, right? So it's just sad.
I mean, I guess I would give him credit that he's got the only game company now outside of Tencent that's more valuable than Roblox. $71 billion is the market value. So there's some wealth that gets distributed that way, right?
I think
the other thing that's interesting is that they have 2,000 openings at Activision right now. And, it's hard to see, it is not a good look at all, for sure. But they lay off 50 people here, and everybody hammers Bobby for that. But he is about to create 2,000 more jobs, and I haven't seen a single story mention that. And maybe they're not going to be able to hire those people, and they haven't been able to hire those people. But still, that's more of the context. The 10,000 person company is about to become 12,000 people, and they did lay off 50, and I think they've just notified people of layoffs coming in Europe as well. Right?
Dude, this is like having an adult in the room. I don't know if I like it all that much. He's making too much sense.
Yeah, what a fair, balanced view. That's a great point. And it does seem like, I don't know if Activision does, but, there was that sort of management philosophy popularized by Jack Welch and GE, where you just regularly trim off the bottom 5%. So they may have a similar kind of management approach or policy there. But yeah, and to your point, Eric, if certain divisions are no longer being operated related to esports or whatever, then it does make sense in that context. But you can't argue that the share price has gone up, and if that's how his compensation package was structured, then he obviously you can argue or disagree whether he deserves that, but it's certainly the share price has gone up, and that's how his compensation package was structured. Next update, Reuters is reporting that Bytedance has acquired gaming studio Moonton, the makers of the popular mobile legends Bang Bang, for $4 billion. In an internal memo, Moonton CEO Yuan Jing said the company would operate independently from Bytedance, so more of this decentralized model that we've been talking about quite a bit. Further, according to Reuters, Tencent also made a bid for Moonton, but the offer was matched by Bytedance. Finally, Reuters also notes that since 2017, Tencent and Riot Games have filed multiple lawsuits against Moonton for copyright infringement. Next update, gamesindustry.biz is reporting that the Embracer Group is raising over $890 million for even more acquisitions. According to the article, quote, Embracer Group said it is looking to acquire new publishers, developers, and other assets, the latter potentially meaning more IP, having purchased the rights to dozens of games franchises in the past. The company also said it is actively reviewing and evaluating a growing number of potential near-term acquisition targets. Quick history lesson for our audience. First, Embracer's most recent acquisitions included EasyBrain, Asper Media, and Gearbox. Those three deals were worth just over $2 billion, with Gearbox as the biggest part of that at $1.3 billion, although much of that may actually be an earnout. And back in November, it had acquired 12 development studios and a PR and influencer relations agency. And for anyone interested in Embracer and their strategy, I'll leave a link in the show notes to a podcast and YouTube video interview with CEO Lars Vingefors and studio CEOs Kenshi Arasaki from Thinking Ape, Randy Pitchford from Gearbox, and Ken Go from Deca. It was actually a really well-watched episode, so definitely check it out. And final update from me, the story no one here wanted to cover. I'll just cover it. No, I don't want to editorialize too much, but the Washington Post is reporting that the Riot Games board found no wrongdoing by Riot CEO Niccolo Laurent, and he has denied misconduct allegations in a new court filing. But for those who aren't aware, on January 7th, the former executive assistant accused Laurent of a hostile work environment and unwanted sexual advances. So this type of article obviously is very difficult to comment on, especially in our current times. However, just to be fair to Laurent, a special committee was tasked with reviewing the results of a third-party investigation that looked for evidence of misconduct. They didn't find anything and therefore declared that, quote, no action should be taken against Laurent. So this is a rough situation because whatever the scenario, if Laurent is guilty, it's a bad situation. And if he's innocent, it's a bad situation. So to wrap this up, we can only hope the truth comes out. And actually, Mishka, I think you've got some updates, so can turn it over to you.
Yeah, and regarding the last news, the court papers were actually leaked. So I was reading some of them. They were on Twitter that were going into details, and I'm not going to go into the details. If you're interested, I'm sure you can find in the depths of Twitter, the details of these allegations. But overall, just not a good look on either side. However this ends, it's not going to end well for one of the parties. Anyways, my updates. So first of all, Laura Toronto, we used to work at King, at Scopely, wrote a deconstructions of Royal Match. That deconstruction can be found on Deconstructor of Fun. So she did previously the puzzle prediction this year and correctly actually predicted that Heyday Pop won't be seeing global launch without significant changes in the team size. So why this deconstruction is important? Well, Royal Match comes from Dream Games, and we covered it in the news, I think, a week or two ago. It's a team formed by XPeak. They shipped their first game, and they've raised $57.5 million. And they just, it wasn't a SPAC or anything like that. They raised from top tier investors. Index was the leading of Series A, and Index previously invested into King, Supercell, and Roblox. So they definitely know what's going on. And the fact that they invested $50 million in Series A into this company makes it very, very interesting. So check out that deconstruction. The second update, Niantic announces Pikmin, a next AR game from the makers of Pokemon Go. So the game is set to launch this year, and the Pikmin franchise is all about exploring a very Earth-like planet with packs of adorable Pikmin creatures. So Niantic made a Pikmin game about walking and exploring the world around you. Makes a lot of sense. So hoping the lockdowns are over so that people can actually enjoy this game when it launches. And of course, this is another Nintendo franchise. And if we look at AR games as a whole, it has had a rough go. I mean, Jurassic World, back when JK was at NBC, holla.
It was a success.
It was, let's call it a success. It came out from Ludia.
It was a success.
And, it was a success. It was like one of the...
Whoa. That was not a success. That was a freaking train wreck. Just stop
Listen.
Hey, I know the ROAS numbers.
Winners write history, and we're going to call it success. JK was launching that game, so it did phenomenal. On the other side, Walking Dead, that came in from Next Games. Also studio, I think, JK, you worked with. I mean, that game was a disaster and almost took down the whole company. And then we got Harry Potter from Warner Brothers. That was a massive disappointment.
Okay.
that really hurt the Warner Brothers San Francisco. And I remember they were coming out saying that they're going to make 100 million and so forth. Like they were really expecting, and they should have been expecting a lot from this game, but it was a massive disappointment.
Okay, first of all, I have two objections to this whole thing, right? First of all, these games are not AR games, right? Anybody worth their salt turns off the AR functionality almost immediately when they download this game, right? So this is horse shit, right? First of all, this is not an AR. You can't put Pokemon Go and say this is AR revenue. No, stop it. Stop. The second thing is that I actually went into Niantic to talk to a bunch of product managers about why Harry Potter failed, right? Before I joined Warner. And I don't think they have a clue as to how to make another game of this. And their whole thing is not AR. Their whole thing is location based, right? And so like, it's really, that's what they should be focused on. So I don't, categorizing this as AR is just folly to me. So I wish them some success. I don't really know how they're actually going to make Pikmin work. But I don't know what they're going to do for second act. Look, Pokemon Go is amazing, dude. The thing is just a juggernaut, dude. And it's did really well last year too. And so I'm not suggesting that that's going to go away anytime soon, but creating another success just seems very challenging and if not almost impossible. And Pikmin, I don't think is the right answer. So that's all I got to say.
Yeah, correct. Anyway, next update, Digital Turbine announces acquisition of Fyber for 600 million in cash and stock. So this comes less than a month after spending 400 million to buy Ad Colony and just 2 months after acquiring mobile DSP Appreciate. So congrats to Fyber. We had their president over talking about their turnaround story just a couple of weeks ago. And I think you need to watch out for Digital Turbine. They're really building an ad tech fortress over there. So
and they're going to start acquiring studios.
Let's talk about that in a moment. And the last article.
I'm
here we
curious,
go.
though, do you guys think that's an IDFA play that these companies are selling out because of IDFA and that the consolidation is happening? Because
you want my opinion? I think everyone's just selling out before the Ragnarok, right? And they're selling at really high valuations, and I think personally everyone's afraid, but they're cashing out, right? Go for it.
I think there's two things. There's that what Eric is mentioning in terms of the risk, and the second part is just the market is great now for selling. So those two things coming together, that there's uncertainty in the future, and now is the best time to sell. Mm-hmm. Let's sell.
And Ironsource is doing its SPAC as well, right?
Oh my lord! Oh my lord!
We're going to talk about that.
That can't end well. That can't end well. All right, we'll get to that. All right.
No. Let's.
Not this story. No, please. I can't take it. I can't take it anymore.
No. Not another ad for Finland.
Yes, CNN Travel. Topic was, this country has been just named the happiest place in the world. So for the fourth year running, Finland has come on top of the annual list powered by data from Gallup World Poll, with Iceland, Denmark, Switzerland, and Netherlands following in second, third, fourth, and fifth position respectively. Researchers say it's no surprise that Finland has retained a top position once again, as the Nordic country has always ranked highly when it comes to mutual trust. Trust is recognized as one of the major factors that help to protect people during the pandemic, as well as confidence in government. You guys are American, so you don't know what it is to trust your government. So I'm just explaining what it really means. Anyway, the United States moved up from 18th to 14th. So happy move. And UK dropped from 13th to 14th, Australia at 12. So for everyone listening to the podcast, of course, this doesn't come as a news. We've been talking about Finland as a great place pretty much every week. And funny thing is, on Deconstructive Fund Slack channel, I've had people working in the industry DMing me and asking for like cost of livings and which neighborhoods should they move in, as well as location to where to set up their studio. Like, where is our studio located?
Oh my God, make it okay. Make it stop, dude. This
do
is like
do they ask for the average temperature as well?
Yeah, and I think
average daily sunlight.
Yeah.
How much does a beer cost in Finland? Yeah, how much does that cost?
They always do the survey during the summer in Finland, right? And I swear this podcast is becoming like a PR machine for freaking Finland, dude. Enough is enough.
JK was in Finland in the summer, like. You were loving it. Like, even your wife was like, damn, like, this is not a bad place. Like,
all right, moving on. Jesus Christ. I can't take it. Oh, by the way, the U.S. Ranked higher than Canada.
Bullshit. Complete.
Yeah. Great White North, my ass. All right, moving on.
All right, starting with the news. First news article we're going to cover is that TechCrunch is reporting that Mr. Beast's management company has started a venture capital fund. The fund is called Night Media, based in Dallas, and they have closed a debut $20 million fund from a bunch of powerful and famous online influencers and other social media stars. So Night Media CEO Reed Dukeshire mentioned they will write initial checks of up to $300,000 and will invest in 3 categories: consumer startups, gaming startups, and 3, the creator economy. And a bit more on CEO Reed Dukeshire. He started off by basically stumbling upon this comedy group called Dude Perfect, who I'm sure we're all now pretty familiar with, and started working with them. And although he no longer works with Dude Perfect, he now manages 16 other top influencer groups, including ZHC, Preston, Matt Stoney, Unspeakable, Azzyland, Typical Gamer, and Carter Scherer. But the biggest star of his portfolio, however, is Mr. Beast, who, as many of you already know, has over 55 million subscribers on YouTube. Mr. Beast posts about 2 to 3 videos each month, and they generally get at least 30 million views. Night Media last year created a joint venture with Virtual Dining Concepts to sell Beast Burgers through a dedicated app. And as some of you already know, Mr. Beast also just recently launched a game called Finger on the App, which charted. And to date, Night Media has invested in roughly a dozen startups. TechCrunch notes that all of the companies have agreed to work with Night Media in exchange for access to its creators and their know-how. What do you guys think?
I was like, what is this? Like, usually we cover gaming news, but now it was like cryptocurrency, and then
this is gaming news.
Like, it's like
Mr.
it feels
Beast.
like it should be like this week in TikTok. This is the show that
Mishka, have you heard of some games like Among Us, Fall Guys,
I know,
Valheim, Escape from Tarkov? What's the commonality?
I get it, and I mean I think 90% of the audience listening to this, I would argue that it's higher than 90%. Haven't even heard about these influencers that you're recalling. Also, the Mr. Beast character, it's kind of like sad for humanity. I actually had to go, and I thought this was like a gaming influencer, like Ninja. So I went in and I looked at it, and this guy's like top videos is like going through the same drive-through 1,000 times, or I ate $100,000 golden ice cream, or I put 100 million Orbeez in my friend's backyard. Like, these are watched by millions.
Yeah.
But listen, in all fairness, all power to Mr. Beast and all power to Night Media. As you said, influencers are a great source for growth, not only for games, but also for other forms of services and products. So, we also have some sponsors. So, we're influencers in some capacity, not necessarily positive, but I mean like negative influencers.
Listening to this podcast is a far cry from what listening to Mr. Beast. I'm appalled by this whole thing, frankly. And every time I start watching this crap, I feel like such a boomer because I don't get it, dude. My daughter sits in her bed and watches TikTok for hours, right? I don't get it. Now, I spend a lot of time watching videos on video games and cars and things like that, but that's different. That's real. This stuff is just fantasy and just so strange that it's so entertaining to people.
You should check out the VTuber Code Miko. She's got this very interesting take on being an influencer with an artificial character, right?
Oh, really? Yeah, I do. I feel old every time I start looking at this stuff. I can't take it anymore. But anyway,
I don't think anybody can argue that this is not important, right? Like, this is obviously very important to the future of the gaming.
Yeah, I think it makes sense that they're investing in game startups. I don't know about the creator economy. Like, it sort of might be like League of Legends, where everybody invested in MOBAs and only League of Legends was left standing, right? And Roblox is the company you want to invest in for the creator economy, and I don't know how much more there's going to be. I think if they invest in influencers themselves, the problem with those businesses, I think, is that they're not going to scale really well, right? And so the game startup investments is probably a good thing, but the influencer investments and creator economy investments, I don't know about that.
What are the companies that they're investing from a creator economy perspective?
I don't know. I mean, there was a list of some of the companies, but I don't remember the specific ones.
Like, is it software to help creators do their jobs?
I don't know.
Okay.
Yeah, I don't know. All right, we'll have to look into
Like,
it.
that makes more sense to me, but
I don't know how Mr. Beast is a good judge of of creative content. Anyway, but I'm moving on.
you're
All
such a boomer. Such a boomer.
I'm such a boomer. He's the smartest and the coolest guy on earth. God damn it. What do I know? All right. 2K Sports acquires HB Studios and signs PGA Tour 2K deal with Tiger Woods. Okay. So basically, the publishing label of Take-Two announced that they're acquiring this developer that actually, I think they made their game last year, their golf game. And then they signed a multi-year deal with Tiger Woods, obviously one of the greatest golfers ever in the world. And so the game, I think this game is coming out. Oh, it's probably his license will probably be used in the next version of the game because I think they have another one coming out this year. So, look, I'm going to upset some fans of Tiger Woods, I think, and probably golf fans in general. But I love this story because there's so many issues with it and so many questions that need to be asked. Right? First of all, why the fuck is Take-Two making a golf game? Okay. You barely get 2 million units out of this golf game. It is a waste of their time and it's a waste of development effort. Now, I personally love golf games because I'm a boomer, right? And I will buy these games or get them for free from my friends at 2K because I do that, right? But no one else cares about golf. Okay. Golf, second thing, golf is not a big sport, right? The only thing that made it big was Tiger Woods back in his heyday. But I'm sorry, guys, Tiger Woods is done, right? Like, he was done before this last car wreck, right? Because his body is like a 60-year-old in a 45-year-old body, right? Because his back is jacked, his legs are jacked. Like, he's over. He's only won like 2 or 3 tournaments in the last 3 years, right? And my last question and the biggest question is, why in the hell would they release this press release like a week or two after he gets in a huge major accident in which he breaks his legs in 3 spots and breaks his ankle? I mean, it's so weird that the PR team would not just hold this back until he gets back on the mend, right? Or now, of course, my cynicism coming out again is maybe they did it on purpose because he was all in the press about this accident, so it's going to get more attention by releasing it. I don't know. But, you know, with Tiger in the news like he was, maybe that was a better PR hit for them. But more of a broad thing about Take-Two, and I probably have said this on the podcast before, but their strategy, Take-Two strategy around sports makes absolutely no sense, right? Casual sports for basketball, the NFL deal for non-simulation games, golf, and, you know, someone seems to be out of their minds creating a strategy on tier 3 and tier 4 sports. I mean, what's next? Are we going to see a NASCAR game, a cricket game, a rugby game? You know, like, this has all been done before. And that's what bothers me so much about this is that we've been here before. EA Sports did all of this and it was a disaster for obvious reasons. There's not big enough audience for these sports. And in golf's case, there's nothing that changes year on year to justify the buying of the game because it's the same freaking golfers and the same fucking courses, right? And so anyway, this has all been done before. And this is when you need CI, right? This is when you actually do consumer insights, test these things, and then you will realize pretty quickly that none of these ideas make sense. And this is just a waste of resource and a waste of time from Take-2K, and it's going to be a disaster. So anyway, anybody have any thoughts on golf or Tiger Woods that they'd like to share?
CI?
What?
Who should they use for CI?
Dan Kwan from Beta Hat.
Yeah, San Juan from Beta Hat. Yes, he will set them straight.
Watch our CI podcast.
I mean, I suppose if you've got 2 million units a year, maybe you got $100 million a year then, right? And
No.
If you just put your business below that, I mean, your costs below that, then you're making money.
No. Okay. Well, I can't agree. I can't argue with the math. I can't argue with the math. The thing is that they don't sell 2 million units at $60. They sell 2 million units at like $15, $20, $30. I mean, the ASP must be really low because it just doesn't move, right? Mm-hmm. But it's also the opportunity cost, right, of things that they could be doing, right, with these development teams. And
yeah, that's. But then you should have 3 or 4 football games, right?
Right. Anyway, none of it makes sense. A lot of sense to me. They're just like filling up the SKU plan. And again, I'll play it, right? I think there are people that out there like it. It just doesn't seem to make a lot of sense in terms of scale.
All right, next article. Thomas Bravo SPAC agrees to take Ironsource public. So 3 things. It's definitely an amazing valuation, 23 times 2021 revenue and 79 times of their 2021 EBITDA. The mere fact that all revenue and no breakdown whatsoever is mentioned in the slides is pretty remarkable. And just as a reference, because Ironsource does have hyper casual business, usually a hyper casual business may be worth 10 to 15 times EBITDA. And if you don't have any revenue breakdown, and if somebody thinks like, well, all they have is hyper casual revenue, then in this case, it would be 23% of the revenue in the midst of IDFA deprecation. But let's get deeper. So analyzing the revenue a little bit, in 2020, they did 332 million. So almost all revenue coming in from plus 100K revenue customers, 59% came in from user growth monetization solution, 29% came in from device placement and telco solution, meaning that 12% of total revenue remaining from other streams, and that would be mainly Supersonic, their hyper casual business, which according to this generates pretty much between 30 to 35 million roughly. And did a little bit of a sanity check on Sensor Tower, makes all the sense. So things to talk about. There's not much to chew on this SPAC document without breaking down revenue or EBITDA. Clearly, it is intentional, and they are positioning this as top-tier software equity story with high margins and high retention. Indeed, Ironsource is a platform play, and publishers will keep spending on the platform as it's one of the biggest ad networks, mediation, and monetization companies in the world. These are facts. The only concern from that, the underlying spend is on user acquisition, which by all means is not as sticky and powerful end product as other volume-based software enabler for core business functions, like for example, Unity, which offers a tool for game developers and then is something that won't be affected as much as user acquisition. And what I wanted to do is I wanted to compare this to AppLovin, because last time I was trying to talk about AppLovin, you guys totally shat on me. So let's get back to it. There was a fantastic newsletter from Invest Game, and this was done by Sergey. He dug up AppLovin S1 in his latest newsletter. It was really buried fairly long in a very long analysis, so it may have been unnoticed. So he took a closer look at AppLovin's revenue breakdown in the S1, and looks like this in the report. 71% is ad revenue generated by AppLovin games. This is Lion Studios and others. So basically in 2020, AppLovin did 740 million in-app purchases, which is 51% of their total revenue. They did 505 million in ad revenue, which is 35% of their revenue. And they did only 200 million, which is 14% of their revenue through ad tech, which is actually less than Ironsource. So really, AppLovin is much closer to a gaming company with an ad tech / ad network on the side and a 50-50 app, and then the game platform kind of making the most. So if your business is doing 50% from in-app purchases, 35% from ads, and rest from the ad tech, in my honest opinion, this is much closer to Playtika and Zynga at 15 times EBITDA than to the Unities, the Trade Decks, the Robloxes at 20 to 30 times revenue. So I know AppLovin people are listening to this, and in case I got the numbers wrong, in case Sergey got the numbers wrong, let us know and we will rectify, or you can come in and talk about this, which I'm sure you won't. But this puts things into perspective, and that is why the platform play is so important. That is why the multiples are just absolutely insane, because you're not playing against game companies, even though you are a game company, but you're presenting yourself as the growth loop, whatever hyper wheel, whatever you may call it, through that ad tech component. And this also speaks of Zynga's strategy of adding ad tech to them. Maybe they will be soon seen as well as this sort of a service provider platform company.
Dude, heaven help us all, dude. Heaven help us all. So I'll just say this quickly, is that going through a SPAC, it could really end badly, just generally speaking, without the type of scrutiny that is required to go public. We've talked about this before. Their IPO value puts them at 22.7 times revenue. Is that right? And the irony here is that one of the guys on the Slack channel pointed out that in a press release like 2 years ago, they said that 2019 revenue was 900 million, and yet in their SPAC document, it's 181 million. So, I mean, it seems like a red flag that their revenue changed so dramatically. I mean, I'm sure it's partly because of different types of accounting that they're employing now. But anyway,
is it accounting or is it gross net?
probably it's something along those lines. I'm sure, but like anyway. So, but these are the things that like are uncovered by going through a full vetted IPO process. Is like these accounting issues, which I think is going to hurt Skills and maybe even Unity when the time comes. But we'll see. But Unity seems to be really pretty.
Yeah, I don't understand why you can't get the full like S1 like financials at a time when the SPAC is actually announced, and you have to wait for it to get filed.
It's not required.
Sometimes months, right?
Yeah,
they're raising, they're getting investors interested in the stock during that time, and yet, from what I saw on the slides of the risk factors, like they didn't mention IDFA at all as a risk factor, right? I mean, it's weird.
No, and this is like all part of like the land grab just to get it, to cash out as much as possible. It's really quite frightening to me, anyway. So here's where these things kind of start to fall apart. And this has already happened with Skills a little bit, and certainly Unity is that, and Unity I know was not a SPAC, but anyway, their implied growth rates were kind of given during their presentations, and the expectations were set during the IPO process. But with the SPAC, they can actually go and give you long-term projections, right? You can't do that when you file a general IPO. And so what these guys are doing at Ironsource is they're putting together a forecast where they're going to grow 37% in the next 2 years, right? And so at $11 billion valuation, right, they better do that, right? Because if they don't, then the stock is going to get annihilated, right? And so that's what's happening with Unity. They brought down their kind of implied guidance. They brought down their implied guidance for long-term growth. Skills kind of did the same thing, even though they had a good quarter. And so this is where all these companies are going to start to fall, I think, right? And to Dean's point, what the fuck, where's IDFA issues? How is that going to impact all these businesses, including AppLovin? And it doesn't seem like there's a mention of it, right? Like this is happening in a week, right? And they don't even discuss it, right? It is very, very, very concerning for me as someone that's been covering video games investments for so long, to see these kind of valuations on companies with a lot of potential threats. And I don't know, Ironsource is a really good friend of the podcast, right? And I really like those guys. Like I've talked to them a lot. I just think, and I'm not saying that they shouldn't go public. What I'm saying is the valuations are implying things that may or may not actually happen, right? And that have not been really fully vetted, right? And so that always makes me a little bit concerned. But we'll see how it all how it all works out.
Yeah, I mean, it seems like what people are assuming is that Ironsource will eventually adopt more of an AppLovin or Zynga type of model, right? Is what it seems like people are assuming. If Mishka, what you're saying is right, where the majority, if people are expecting, based upon the advantage they have from a ad network, ad tech perspective, that you can get content advantages, and that eventually the majority of your revenue is going to be coming from the content side, then that could be part of the valuation justification.
Yeah, it's also just a different model. Like if you go with a SaaS model and you list yourself with that, the multiples are 20 to 30%. And then if you're a game company, it's 10 to 15. So I think that's the play with AppLovin. That seems to be the play with Ironsource, just showing that we're a platform. And naturally, Ironsource is an ad tech company. They do have gaming business, but it's 15% of all the revenue. But AppLovin was interesting. That Sergey's breakdown that they actually make vast majority of their money through just normal gaming business. And when they present themselves, there's like this flywheels, it's this and that and this, and like it's a full on, they talk about apps. They don't even say games, and it's a gaming company.
Yeah, I wouldn't be surprised to see AppLovin actually expand into apps as well, though. I mean, that would. They
will expand to anything. They're I think like FunPlus. Like FunPlus does, whatever makes sense, we'll do it. So I think they see it the same way. They're very opportunistic, but today it is a gaming business. When they're IPOing, it is straight up gaming business with an ad tech component.
All right, let's move on. So facing post-Trump slowdown, the New York Times is eyeing the $100 billion games market. So the New York Times is currently under pressure to diversify their brand away from news for obvious reasons. The Times is actually investing more in its cooking app, selling subscriptions to Wirecutter. It's a product recommendation site, and even experiment with Autumn. I don't know how to say it properly, but a read aloud audio subscription. So obviously they're trying to diverse away from news. They're trying a bunch of different things, and games is one of them, right? The goal is, trying to drive as much new types of engagement from within the New York Times app. And I think that's kind of a critical component here. So, let's enter gaming, obviously, right? Obviously the easiest industry to enter, drive reach and margin, right? Let's see. So the interesting thing here, which actually kind of changed my opinion about this, of just the immediate assumption of reading the headline and reading the article of, who's joining games, who's completely naive about the costs of entering this industry. They already actually have a pretty decent slice of this. They have 840,000 game subscribers year over year. So they have a $40 a year subscription. And it's growing about 40% year over year from 2019 to 2020. So they have goals, like Apple, to actually even bundle some of these subscriptions together with the cooking thing and the Wirecutter thing and the gaming thing. Okay, this makes sense. So now they've added Jonathan Knight to join the New York Times after leaving WB and previously from Zynga, where he was the SVP of the Vil games and the With Friends games, to help build out this word game portfolio within the company. So I think really the question to kind of chum the waters here and get some debate going is, what would you do if you were the New York Times, right? And you were sitting on this gaming asset. Would you create this app within the New York Times app, or would you create solely separate games, try to drive as much reach with them, and then pull them towards that central app as a secondary thing?
Yeah, and actually, maybe we should hear from Dean. Dean, as someone who's part of news source, it'd be great to hear what you think in terms of would you guys have VentureBeat gaming division or GamesBeat gaming division as well? What do you think, Dean?
No, I think it's a very interesting move. I mean, I think that the business models have to change in the media industry, especially anything that's built so heavily around advertising, right? It's like always a race to the bottom when you're trying to extract good ad rates out. And I think that, I don't know if you guys heard of this company Arcadium before in New York, but they supply simple web games to like newspapers and other media companies, and these generate revenue for the just traffic that they get, and so. I think if they've tried that at the New York Times, then I think that's probably, just the sort of unclaimed revenue that, they could otherwise get for the traffic that they have, which is, considerable. And then it becomes like, okay, if you're going to, invest in the game business, like how serious are you about that? Because as we just saw with Google, right? I mean, when a non-games company dives into games, Google even hired 150 people. It doesn't often end well. And so, if there's a reason to do New York Times branded games, then I think that's what they have to search for and focus on here. Whereas, if they are just trying to do the next Match 3 game or something like that, then that's pretty dangerous.
Yeah, my off the cut analysis was pretty much the same as Adam pointed out. Like when I read this, and I actually knew this before, I know Jonathan Knight, and I saw his Facebook update months ago that he joined New York Times. So at that point, I thought the same thing. I'm like, this makes no sense. Like, why would a liberal newspaper that writes these super in-depth, long-form articles be making games? So, but further thought, I mean, Adam, you pointed it already. They have a games business. And I think a lot of their readers, this is just totally hypothetical, and not even the type of readers that would download apps. And this would be something inside that reading experience where they would play crosswords and normal stuff that you do have in newspapers, like back in the days when we didn't have smartphones. And also, they could leverage their cross promotion and their ad monetization skills, and maybe the ad monetization from the games could actually help them to monetize the newspaper better. I've always, for example, wondered, why can't I just watch some news articles so that I can read a little bit of a newspaper, maybe watch some more so I can continue reading it, rather than them asking me to subscribe for like 25 years to this newspaper. Anyway, when we think about their competences, they have made games and they have been fairly successful. That's why they're investing into this. They haven't really run a games business before, but now they have JK. Oh, so sorry, Joseph. Before I knew you as a JK, I knew JK as a JK, and that's Jonathan Knight. So JK is there running. You know, he used to be running Friends. He used to run Ville. He actually ran both at the same time. Then he was running Warner Brothers San Francisco. So I've worked under JK, and he runs his shit like a train. So he has his own playbook, and he executes that playbook to a T. So I reckon like what's going to happen next is they will have a more professional approach to making games. They will bring a bunch of Zynga PMs to the foil. And there will be some turnover because that will shift a certain type of culture inside the company. Same thing happened at Warner Brothers San Francisco. You know, a lot of people, Zynga people came in, they were a little bit of a shift, and then they moved along with a new type of organization. And I think, you know, they'll be chugging along and making several games in the coming quarters. I don't know how successful this would be. I have actually no clue. I hope it's going to be successful. I hope New York Times can diversify and keep their audience entertained in other forms than being outraged at everything. And all the other form. Like I hope they will just be, you know, playing crosswords rather than reading the newspaper.
Let's not make this political.
Yeah. So
I like the New York Times.
Let's just say I hope they enjoy crosswords.
I think one thing that would be interesting is like, I don't know if you guys ever saw the sort of Syria, sort of like a trip through Syria virtual reality experience, but you know, seeing like a place that you could never otherwise see through something like VR is kind of incredible, and it's like an incredible move forward for journalism, I think. And so if somehow they could you know wrap content like that into games, then you know that is something that nobody else does.
Yeah, maybe. Or then the other hand, when we look at the article that JK presented, where all the people want to you know watch is how you can drive through 1,000 times and order hamburgers, and that is the best content you can have in America. So I don't know. I don't like the audience preference is like, or should I watch like despair and just horrible things happening in Syria, or drive through 100,000 times. So it seems like people have voted towards the other direction, just numbing themselves with pointless entertainment. So
I don't know. My only comment, this seems to make sense. You know, you make smart apps for smart people and you help with the retention and engagement, advertising, whatever, maybe even keep the subscriptions live, you know. I don't know. Seems worth it. I always liked Jonathan. I knew him at EA briefly, and then I met him again at Warner. I think he seems to be the right guy for this kind of thing, and I think he can kill it. So we'll see what happens. I mean, I do think New York Times needs a little assistance now that Trump's out of office. So this might help.
Yeah, I think the thing to consider, to Dean's point, right? It's like media companies need other sources of revenue. I'm a little bit less optimistic than you guys, because when you think about newspapers and the kind of games that make sense associated with like the New York Times, it's basically crosswords, Sudoku, and cooking, right? And maybe comics, but it's not a lot. And so, I mean, I don't know Jonathan's background, but like, you know, you've got potentially limited scope, and then you really like, I mean, didn't he work on mid-core games? I mean, I don't know him at all, but
no. He worked on Ville, and he worked on Words with Friends.
Okay, yeah, maybe it's a good fit, but
the Westworld games, right?
Yeah.
Yeah, the location-based games. So Jonathan is he's an executioner. Like he just executes games. Like they come out under him. Like that's what he's known as. He gets the organization and just ships games. So that's why I said like there will be shipping games and there will be reorgs. Like in my opinion, like not crazy reorgs, but he will change the organization to the form where he can perform at its best.
Right. I mean, I think to the extent that there is an existing model, that's the right kind of person to scale an existing proven model. But to the extent that you need to finesse this a little bit and figure out, how do we do cooking or cooking games or whatever in a new or innovative way, I would be a little bit concerned.
But I would raise this, like, what is the type of management that New York Times has? Like, how much are how much they're in tune, how much they understand of this, how much they are going to invest into this, how much are they going to be, putting their fingers in, like, let's not do this, let's do that, how much creative input they will be giving? Or is Jonathan able to run this organization the best, the way he feels it should be run? And the second point that I wanted to point out is Jonathan has been shipping big games. Like, he's been working on big games and trying to ship really, really big games, like the Harry Potters, the Westworlds, Farmvilles, Words with Friends, these type of games. And now, is he going to go down, like, not down, is he going to go and ship like no-name crossword games? I don't think so. I think his aspiration level is much higher. So that's also a big question there.
Yeah, obviously the detractor here is the innovator's dilemma working within a massive company that doesn't really understand this business, right? I think that was obvious right from the headline. But if you limit the scope to just word games, right? Word games dominantly have pretty good reach and have actually pretty good retention. They just don't monetize all that well. So now they have the leverage of being able to monetize through their existing advertising networks. Obviously not going to be super optimized, still going to make money there, and also drive towards subscriptions of their gaming subscription or the subscription sub, like the grouping subscription. So overall, I think if their ambitions, like as the New York Times, if their ambitions match their cap here, then it could be fine. If their ambitions are to win, yeah, these guys aren't going to beat the hyper casual developers in the space, right? But I think if their ambitions actually match their cap, then this will be fine.
They should make casino games.
No, absolutely not.
All right, I think that's well. Actually, did we want to talk about Discord?
Yeah.
Dean, you got an exclusive inside info for us? Is Microsoft buying them?
Well, we did do that exclusive report that they were in talks with one company for an acquisition that could be worth more than $10 billion. Unfortunately, Bloomberg didn't contradict me, but they did also additional reporting, and they also confirmed what I was hinting at in my story, and that was the company that's in the talks with Discord is Microsoft. And I believe that they're in an exclusive talks period, which typically I think lasts about 30 days. So that means that it's a lot more serious, I think, than just kicking the tires and seeing if they can do this, or maybe they do an IPO or something like. But if you go into exclusive talks with anyone, then you're pretty serious about making something happen. And I think Microsoft's probably has a pretty good pitch for Discord that we can help you accomplish your mission easier and faster and more effectively than if you were on your own and tried to go through an IPO and stay on your mission.
Yeah,
and they know, like, didn't they acquire Yammer back in the day? And like,
yeah, they've had
Slack just kind of.
They acquired Skype. They acquired Mixer, right?
Yeah, their track record's a little bit suspect. But part of the strategy here probably is the bankers are probably throwing these press releases out there to garner more interest than Microsoft. I mean, that's a general ploy of M&A bankers, right? I mean, Dean.
Are you asking me who my sources are?
No, I didn't. Sorry, didn't mean to go there. Anyway, let me just make it a stated fact.
Yeah.
Bankers have strategies in which they throw it out there so that they get more interest from other potential buyers. This happens all the time, and it's happened many times, and we've talked about it in the podcast before. The second thing is, like, we were talking about this in the Slack channel. It's like there are very few companies that actually can afford Discord because they lose so much freaking money. Right? So it's like when you buy $10 billion and you're losing hundreds of millions of dollars. I don't know how much they're losing, but they're losing a lot. So there are very few people that can actually acquire this company, and they're big enough to absorb these type of losses. It's like similar to Twitch, right? I mean, Amazon Twitch loses hundreds of millions of dollars a year. I keep saying that, and they still lose hundreds of millions of dollars a year. And so only Amazon, a company like Amazon, could actually acquire that kind of asset. So, but it's
their revenues last year were $140 million, and everybody kind of like compares Discord to like, oh, this could be the next Roblox, right? But Roblox had what almost $2 billion in bookings and $923 million in revenue, and Discord has like a tenth of that, right?
Yeah,
so,
right.
Trying to go public on a tenth of what Roblox has, that's not going to be that easy, I think.
No, and the problem is they don't have a business model, right? Discord really doesn't have a solution for a business model, and
but haven't they been showing pretty?
Interesting thing is that they've sort of turned down the business opportunity of advertising, right? And they are strictly a subscription business, and they believe that is essential to the user experience of Discord.
Right, and Twitch founders had the same type of vision, that they were made for the creators, not made to make money from the creators, or something along those lines. Like the philosophy was not a revenue generating philosophy. So anyway, I Microsoft can make as many plays as they want, right? They got all this money, they can try it again, right? I would be, if I were Discord, I don't know if I would go to Microsoft, to be honest. But
just do SPAC.
Oh no, please no.
They do have a more focused and serious game division than I've ever seen at Microsoft right now. Acquiring a dozen companies in the last couple of years, including Bethesda. Right? I mean, that's showing their intention that they are really serious about games.
Yeah, I was not going to mention this. I had a talk with Mike Verdu. Do you know Mike Bean? Yeah. And he gave me some insights about why these big companies fail on gaming and we've said it in the podcast before, but having him say it makes me feel smarter, right? Is that like you have to create a separate entity that does games, because any big tech company that says, oh yeah, we're going to do games and we're going to do it the Facebook way, or we're going to do it the Google way, they're going to fail, right? Because that's not the way you make games, right? And so I agree. Now that you've actually mentioned it, Microsoft did, one of the big companies that did a good job of separating Xbox into a different campus, a different operating entity. They basically were beholden upon themselves, and that turned out to be successful. And then every other thing like Amazon and Google have failed so miserably because they try to do it their way, and that way doesn't work. So anyway, it's a good point about Microsoft and Discord, because they would probably make it work better. Although,
what?
I know it's former Sony executive who went to Amazon and asked them that, like, are you going to let us operate on our own the way we think is right? And they said, well, you're going to be part of Amazon. and so that wasn't the right answer. And so the guy didn't take the job.
Yeah. I'm very negative on Microsoft. Joseph. Yeah. And then look at Minecraft. Quite possibly the most under-leveraged game product in the world. You know what I'm saying? Like where Roblox has taken off.
I don't know. Well, I don't know why you said that.
Minecraft is doing great. Minecraft is
killing it right
now.
But
what could it do? Like, you know what I'm saying? Like it could have been Roblox.
I think it is Roblox. It's just as big as Roblox. Right?
Yeah, I mean, they're big in a different way. It's not Roblox, but it's super popular. And actually, I think they've done better with the demographic. I think they've actually been able to expand the demographic for Minecraft compared to Roblox.
And what they got it for, like, was it
a billion?
Billion, right? I mean, that price compared to the price people are paying today for things.
Yeah. Could you imagine? Could you imagine?
Yeah.
Incredible buy. I just think they need to leverage it better.
That founder, the founder of Minecraft could have bought 1,000 $70 million houses in LA, right? If he had waited like a few years. Well, I wonder what he's doing now. Is he just out, Dean? Do you know?
The last I heard, he was throwing big parties.
Yeah. Build out the Wonderland.
Let's end the podcast on that.
Hey, Dean, Dean, thanks a lot for coming. I honestly, it's almost an honor to have someone like you on the podcast who actually knows what they're talking about.
Thank you.
All right, just kind of in conclusion, Dean, do you have any final message for our audience, or how can people reach out to you?
Well, let's see. Well, thank you for having me on the podcast. It's fun, and I think there should be more fun in the world. So that's great. I'm Dean Tack on Twitter, and I run a conference that's going to have a next installment on April 20th and 29th.
Nice. All right, guys. Well, there you have it. That's it. See y'all later. Bye.